Every month, the US federal government releases employment data. It tells us about how many new jobs were added, what the employment rate might have changed to. It's very interesting data in its own right, and it can really help us build some context around the business analyses that we perform to help us understand how businesses might respond to the labor market as it continues to evolve in this country. So I want to show you how we capture that data and then how we can put some simple visualizations together to get a sense of the story that data is telling us. We're going to look at three different data sets in this video. First, we're going to look at the total number of employees. Second, we're going to look at the amount of earnings that each of these employees by segment has. And third, we're going to look at the unemployment rate and how it's evolved over time. Our first step will be to grab the data. As you've seen here, I've searched Google for BLS CES data, where BLS is the Bureau of Labor Statistics, CES is the current employment statistics, and we want the data set from them. And that's the very first result that we see. So we can open this one in a new tab. Now we're looking at the current employment statistics webpage. And if you've not been to this page before, I do recommend you spend some time checking it out. It has really interesting information. It says here at the top, it produces detailed industry estimates of non-farm employment, hours, and earnings. And if we scroll down this page, we see right here on the left a charts section where we're looking at the employment change by industry with confidence intervals, which is pretty cool. And the most recent data is the January 2022 data. It's seasonally adjusted, and we're looking at it in thousands by this grouping of sectors here. In this tab, we're looking at the 1 month net change for each of these. But we can click into the 3 month or the 6 month or the 12 month changes. It's a pretty cool collection of charts, and it gives us a good sense of what the employment picture looks like today compared to different points in the past. So again, if you're new to the page, or if you just want to orient yourself around the most recently released data set, this is a good place to spend a little bit of time. What we want is the data, and so we're going to click on this CES data tab, and I like to go straight to the databases. And in this page, we're looking at the employment, hours, and earnings, again, the national view of these data sets. I click on the one screen tool to grab the data that I want. So we can open this dialog box a bit. Here in box number 1, select one or more data types. I'm going to choose all employees in units of thousands. For box 2, select one or more supersectors. I'm going to go ahead and grab all of those supersectors. That takes us to box 3, where we select one or more industries. And here I'm going to grab basically all of the high-level groupings, so the 1,000 box with mining and logging, but I won't grab anything beneath mining and logging. 2,000 is construction, I'll grab that, but again, not all the small items below that. The 3,000 is manufacturing, and we'll keep scrolling down. The next one should be the 4,000s, which is here. That's the trade, transportation, and utilities look. Let's go down further still. We'll get to the 5,000 block, which is information. And there's just a few more. The 5,500 block of financial activities I do want. That will take us into the 6,000s, which is here, professional and business services. We then want the 6,500s, education and health services. There should be only 3 more that we need. There's leisure and hospitality. Then we get to other services, and the last one will be government in the 9,000s, and there we are. I only want the seasonally adjusted numbers, so I'll deselect the not seasonally adjusted option. I will click to add this selection. So here's all these data sets that I requested. Now I can click on Get Data. Here is all the data that I just requested. And we see at the top it starts with the total non-farm supersector, but if we scroll down, we get to total private. And then there's goods producing, and if we keep scrolling, we see all the different choices that we made in the previous dialog. We get access to all that data right here. Now that we've found the data we want, what I do is just copy and paste it, and in this case, I'll copy and paste it into Google Sheets. And I typically start right here at this employment hours and earnings line, and I just drag all the way to the bottom of the web page. And we requested, I think it was 16 data sets or something like that. So I do go to the bottom and then copy that just using a keyboard shortcut to copy it. And then I have a Google Sheets document here where I have already pasted in that same data set. So again, if we scroll all the way to the bottom, we see we have all these data sets where we're looking at the employee count, where the last one is the supersector of government. And now we have this data in our Google Sheets workbook. Now the challenge is it's formatted the way it's formatted. That comes from BLS, right? It's not particularly useful to us in precisely this format. So what I spent a little bit of time doing was created a different worksheet where I basically try to organize all of this data into table form. And I can set up another video where I walk you through exactly what I'm doing here. But on the month column here, I'm starting at the beginning of 2012 and getting all the way through the end of 2022, or nearly the end of 2022. And I specify what column we're going to look at on the previous sheet and what the worksheet is where we're pulling all this data. And then I'm just doing some arithmetic to know what row I'm trying to pull to get this month, this year within this data set. And I can do that for all those data sets. And now I have all the data together in a way that's a little easier to analyze inside of Google Sheets. Now that we've gathered this employee data, let's visualize it. We can jump right into the first visualization here. We're looking at a line chart that shows U.S. employees on non-farm payrolls from the beginning of 2012 through the January of 22 data point. And we see a straight line, going up and to the right starting in 2012 with a strongly noticeable dip in the first part of 2020. And that, of course, is the result of the coronavirus. So we see a couple months of a drop, a very sharp drop, and then a quick rebound, not all the way back to your pre-pandemic levels, but a quick enough rebound over the next few months. And then more or less back to this growth trajectory that we had been on before the pandemic. So now, as we get into January 2022, we're still a little short of the total employee base that we had before the pandemic. And this is part of what's known as the Great Resignation. But this visualization here gives us some good context of what U.S. employee counts have looked like over the past decade. The next visualization is a pie chart, and this is showing us the U.S. employees on non-farm payrolls by industry sector. And we're looking at fractions here. What percentage of the total lives in each of these super sectors? And we see that trade, transportation, and utilities is the largest industry sector at 19%, followed by education and health services at 16%, and then government at 15%. So we're talking nearly 50% of the workforce just in these three buckets. And then it goes downward from here. So this one's good for us to get a sense of how is the employee base. We saw the count of those employees in the previous visualization. The pie chart now tells us of that total, how is it distributed across sectors? That's what the pie chart tells us. And lastly, for visualizations in terms of just the U.S. employee count, we can look by industry sector. And now we're again looking at a line plot where we're seeing how these numbers have evolved from the beginning of 2012 through the January 2022 data point. And here we're looking at just the biggest sectors, again, trade, transportation, utilities being the largest. And we see a dip down in all of these sectors and then a recovery. But what gets real interesting is you can see that these different sectors don't look like scaled versions of themselves. The dynamics really are different. And it's possible that, when you're looking through this, the one that stands out to you, it's certainly the one that stands out to me, is leisure and hospitality. And we see just a crash from, say 16, 17,000 million employees, all the way down to below 10. And then it jumps back up and it starts climbing in, but still, we're frankly nowhere quite near where we were before the pandemic in the leisure and hospitality section. And then you go down to financial activities, that's the blue line second from the bottom, and we do see a blip. We see the number go down slightly, but then it kind of goes along and starts growing again. Not nearly the disruption that we see in leisure and hospitality. So this chart I like a lot because we get a sense of which sectors are the largest. We also get to see which of these sectors have been impacted the hardest from COVID and what their recovery profiles look like. So far, we've gathered employee data, we've visualized it, we've seen how the employee count breaks down across sector, and we've seen how those counts have evolved over time. Next up is employee earnings, which we can also look at by sector. Here we're visualizing U.S. employee weekly earnings by industry sector over this same 10-year window that we've been looking at for our other data sets. And we see the highest paying sector is financial activities. And in January 2022, we're looking at weekly earnings of nominally $1,500. And to get a sense of how this would translate to an annual compensation level, you could say, let's say there's 50 paid work weeks in the year. So for every $500 of weekly earnings, we're talking $25,000 of annual compensation. So that $1,500 number is saying in financial activities, the average annual earnings is probably around $75,000 in a year. And then next up is professional and business services, followed by construction. Again, when you go to the bottom, you see an interesting gap here all the way down to leisure and hospitality. And that's where we're seeing weekly earnings on the order of $500. And so this group has been hit particularly hard through the pandemic. We already saw in one of the earlier visualizations that the aggregate job count in this sector crashed the hardest during the pandemic, has recovered the weakest of all the sectors through the pandemic, and it's the lowest paying sector of these sectors here that we're looking at. So that group has been vulnerable. It's been exposed, and the economy has paid a price. Certainly, the workers in this super sector have paid an enormous price as a result of all this COVID-related pandemic, and we see a lot of that here in these weekly earnings data. We've looked at employee counts and employee earnings. So the third data point is the unemployment rate, and we'll look at that next. And this one's going to be a quicker and easier dive than the all employees data and the earnings data, because we'll just go ahead and use the tools that are on the Bureau of Labor Statistics site itself. So we're looking at the Bureau of Labor Statistics main site. And again, if you haven't spent time here, it's worth spending some time and getting a sense of how it's laid out and what's involved. Here on the right-hand side, there's a latest numbers area. You can see there's some key numbers for the economy that the Bureau of Labor Statistics is tracking. You can explore all these. I want to dive into the unemployment rate, which it says was 4.0% in January of 2022. And I specifically want to click on this graph option here. It says 10 years of historical data. Let's go ahead and look into that. It's exactly what we get here is a chart that's showing what unemployment rate has done since the beginning of 2012. It's seasonal unemployment rate. It's in a percent or rate for 16 years and older. And we see a trend that you may or may not have expected. I don't think this spike should be terribly surprising since that happened in the very beginning of 2020. So it's well placed around the coronavirus pandemic. That's when millions of people lost their jobs, basically simultaneously as lockdowns emerged as a public policy option. So we saw a huge spike of unemployment. And since then, it's been a steady decline back to levels that we were seeing before the pandemic set in. And so we can scroll down a little further. That's what this table is showing us here, that we have a 4.0 unemployment rate in January of 2022, a very slight tick upward from the 3.9 we saw in December, but lower than every other month we saw in 2021, and lower than all the months we saw in 2020, except for January and February, before the pandemic really set in. So you can see the January 2022 unemployment rate of 4.0 is exactly what we had in January 2019. So historically, it's not unusual, at least in recent history, for us to be at this kind of unemployment level. And that's what this chart here shows us. So we don't have to do anything more with it than that. We can look at it from right here on the BLS webpage to get a sense of what's going on, and that's something we can use in our future analyses. In this video, we relied on a bunch of data sets from the Bureau of Labor Statistics. We looked at employee counts, we looked at employee earnings, we looked at how the unemployment rate has evolved. The next step would be to use these analyses to better understand why businesses are performing the way they are, why they're paying for labor what they're paying, why their employee counts are moving the way they are. This is a nice bit of support for the story that we could tell by learning about a specific individual business. So if you liked this, I recommend you check out, I did a complete analysis on Disney that you could check out. I also have another video about free data sources that we can use to supplement our business analysis. This employment data that we looked at here is one example of these free sources. There's other free sources that you can use to further build out your analysis. So thanks again for watching. I'll see you next time.